We're going to switch gears, talk a little bit about Google right now. The company's saying today some web search features have been partially blocked in China as they wait to hear from China's government on whether they can continue providing internet services there. Well, John Aiken, senior internet analyst at MAJESTIC Research, covers Google. He has been tracking whether the internet giant will lose its right to operate in the country. John, good to have you here on Street Smart. So do you think they're going to lose their right to operate in the country?
Yeah, I think that the latest move is very much a loophole type move by Google and something just to extend the period of time they're there. I think it's very likely that they proactively leave fully, but I think they're going to let the government eventually withdraw that license, which sounds like the sort of next logical move in this conversation for the government of China.
What does Google get by this? I mean, you say they'll proactively leave fully, so they're going to do it themselves.
No, I mean the exact opposite. They're going to let the government push them out versus proactively leave.
Oh, they'll let the government completely push them out. But it still is in Google's choosing to basically lose China as a gigantic customer, right? I mean,
sure.
They have pushed for freedom of speech, and that's why they're losing it. Is it the right business decision?
I think for shareholders, it's probably the wrong business decision. I think they feel ethically it's the right business decision. Sergey Brin, who was born in Russia and the USSR, feels obviously very strongly about this. I think investors are very concerned about this. You're losing a market that could be bigger than the U.S., probably bigger than Europe ultimately in terms of the number of users.
I got to tell you, John, I find it staggering because for decades, really, I mean, U.S. companies have all been salivating over the potential that the Chinese market, the domestic market, will unfold for those companies, and they've done nothing to disrupt that relationship. Is Google, I mean, is it really a bad mistake?
It's a really bad mistake from an equity holder perspective. Google is one of the worst performing stocks in the NASDAQ 100 this year for this very reason.
And short-sighted?
Yes, very much. I think that they're waiting for the government to become more progressive, and this move is probably going to sort of remove them from its position of strength when that does happen down the road. And so it's sort of penny. Whatever the phrase is, penny
wise, pound foolish.
Exactly.
Right.
Let's talk about other ways Google can make money. There's the idea to start its own social network, Google Me, seems, I would think, difficult to compete against the big ones already out there, and really there's only one big one left. It's Facebook, right?
That's right. This is a very, very important thing for Google. Google is sort of in a position of structural stress right now within the internet. What we're beginning to see in the internet is a change in which the internet is evolving. So in the past, the utility of search was related to the fact that more and more websites were existing with more and more content. Today, starting sort of in mid-2008, we've seen the opposite of that. The internet's starting to consolidate. The number of places that people buy goods and the number of places that they visit is actually consolidating, and so the utility or value of search is shrinking, and social networking is a big part of that consolidation.
But what's the likelihood of Google really competing against something like Facebook that's so established at this point?
I think it's pretty unlikely, frankly. The big value that Facebook adds to users. So the question is, what does Google add that Facebook doesn't add? And Facebook adds, they've got email, they've got instant messaging, they've got a place for you to store your photos. Eventually, they'll have a place for you to store your files. Facebook is really the world's first version of a soft desktop or a mobile desktop that you can access over a browser. That's sort of a holy grail that Microsoft's interested in. Google's trying to do that with Gmail. They just started with email and started integrating things. Everyone's trying to get there. Google's just sort of really far behind the curve on this.
Does Google, though, have to add the social networking perspective here? Because obviously, a lot of people are going to start searching on Facebook. They already, like you say, email from Facebook. You pretty much can do anything from your Facebook account. So Google needs to at least offer that, right?
Yeah, so one of the things that Facebook is likely going to be doing, which Google, I think, is very interested in doing the same thing, is start to monetize some of the newsfeed information. So when you do a status update, your friends see what you're doing. So you went to this great restaurant last night and you had the fish of the day. Well, there's no reason that they couldn't link to that and link you to, say, something like OpenTable or the restaurant's website. That's no different than a click on search. It's a lead. And so Facebook is about to populate the market with a very large number of leads, and the supply of leads out there is going to go up by 25–50%, and that's going to cause a lot of pressure on pricing at Google, and they realize this, and so they have to get into this market quickly.
All right. Hey, John, thanks so much for joining us. John Aiken, senior internet analyst at MAJESTIC Research, covering Google. We're going to take a